This is a lecture from Open Tuition. For the free slides that go with this podcast, please visit opentuition.com.
This slide simply illustrates a very wide-ranging influence of the accounting profession. Financial accounting. The accountancy profession deals with how items should be shown in the accounts. In other words, they establish the accounting standards. Secondly, once companies get to a particular size, they have to be audited. And audit is an independent gathering of evidence that allows the accountants to report whether or not the accounts produced by the company show a true and fair view. Within companies, there will usually be management accounting. This will be looking at budgets, future estimates, and will be recording on a month-to-month basis how the company is doing and investigating why it might not be on track to hit the required profits. Many accountants also provide consultancy, for example relating to the IT system, particularly for the accounts function, and in perhaps setting up remuneration schemes and systems of internal control. Accountants have a very important role in helping organizations to calculate their tax liabilities and reporting this to the government revenue authorities. And finally, within the public sector, that is, government organizations, accountants are very important in tracking and recording the expenditure of public funds that have been raised by taxation. The International Federation of Accountants is the global organization for the accountancy profession. It works in over 120 countries and jurisdictions to protect the public interest by encouraging high-quality practices by the world's accountants. Through its independent standard-setting boards, IFAC develops international standards on ethics, auditing and assurance, education, and public sector accounting standards. It also issues guidance to support professional accountants in business, small and medium practices, and developing nations. The IFAC Code of Ethics is a good illustration of a professional ethical guide. The code states that the accountancy profession has a responsibility to act in the public interest, and it then goes on to establish detailed guidance of fundamental principles in ethics. You'll shortly see what the fundamental principles refer to. Having identified the fundamental principles, the framework then requires accountants to identify, evaluate, and address threats to compliance, applying safeguards to eliminate the threats or to reduce them to an acceptable level. For example, you'll shortly see that one of the fundamental principles is independence. But how can an auditor be independent if the auditor receives an audit fee from the client? So there we have a fundamental principle, and we've identified a potential threat to that fundamental principle. The safeguard applied is to put a limit on the amount of fees coming from any one client, so that the auditor would not feel unduly threatened if that client were to leave after a dispute about the accounts.